marijuana plus cigarettes. Mcig. Obviously, that's where the name came from. They're one of the leading penny stocks, and at first glance, it's fascinating how well they're doing, considering that trying to make it big time in two rising industries holds too many risks. But as we said, at first glance, things aren't what they seem. Let's start with the fundamentals of Mcig. Their latest quarterly report was filed for the period ending with January 2014. The company reported $37,000 in cash, $91,000 total current assets, and over $85,000 in revenues. Since current liabilities were just $22,000, after cost reduction, Mcig were left with a net income of $10,000. On the OTC markets, you can see a ton of financials riddled with debt. While definitely not the most impressive, these figures are better than most other penny stocks out there. And in this case, there's something else worth mentioning. Back in April, Mcig released two statements with claims that they broke, then rebroke the 24-hour sales record on Mcig.org. It seems this later translated into a rise in cash reserves. In their May shareholder presentation, the company stated $400,000 in cash, while in a release a few weeks later, you can see $500,000 in the same category. But are those numbers real? The sources aren't official SEC filings, so you should take them with a grain of doubt. In July, Mcig are supposed to produce a 10K, and 10Ks are audited. But until then, they can say anything they want with only their word for proof. And if you've been following the company, you'd probably know their word isn't unbreakable. The release in front of you is one of the best examples for this. It caused a minor crash for Mcig at the end of April. In essence, a 2013 agreement between Mr. Paul Rosenberg and the company was amended because, here's the interesting part, they found an error in the SEC filing. Bear with me for a second while I explain to you why that's very strange. Under the original agreement, 230 million of Mr. Rosenberg's common shares were canceled for 23 million preferred shares. The preferred shares have an increased voting power of 10 votes for each one. They can be converted into common stock for what was written as a stated number. That wasn't really stated anywhere. The preferred stock was also put under a one-year lockdown. 5 months before the end of the lockdown, an amendment suddenly appeared. A press release said that there was an error in the filing, and with the correct terms, the preferred shares could now be freely converted whenever Mr. Rosenberg wishes. The company's share price immediately fell on the terror of massive dilution. What's the point of agreeing to a lockdown if you can just cancel it at any moment? It's all just empty words if you don't follow the rules. In the May shareholder presentation, Mcig management actually gave a reason why they did it, but we'll leave it to you guys to determine if it's a good one. They said that in order for Mr. Rosenberg to dividend his part of Mcig to shareholders, his preferred rights would need to be convertible on demand. They also said that the SEC recommended the change in the filing, which contradicts their earlier statement. Then, on May 29th, a press release mentioned for a second time that the amendment was due to an error. Which one is it, people? Is it an error or not? To be fair, Mr. Rosenberg needs to file 4Ks before he can convert any of the shares. But the bigger problem is the conversion rate. Conveniently for him, Mcig don't include a fully diluted graph on their reports, which hid the truth for a long time. For months, we've been explaining that the conversion rate is on a 1 to 10 basis, but it seems most people were unaware of this. This moved Mcig to clarify with a statement that, indeed, this is the logical conversion rate. That makes 270 million shares issued and outstanding, and an additional 230 million more convertible on demand. Meanwhile, Mcig are trying to put up their subsidiary Mcig for public trading and dividend shares to all Mcig shareholders on a one-on-one basis, which is great for the company's supporters. But is it good enough? That's the question. Lately, the SEC has been on the hunt for pot stocks. The FDA has been trying to impose regulations on vaporizers, and as a whole, Mcig have been dodging bullets left and right. Knowing this, it's doubtful whether the company is in for a bright future at all. This is Martin Nadenov for Hotstock.com.
I have a small amount of money to invest and I want to gamble in the market. I'm looking for a penny stock that'll go up and turn it into $100,000 or $1 million.